I don't want my money to support that cause. How do we invest in a way that's consistent with our values? Especially if we're Christians and really care about our faith and some of the things that we think are biblical values. How do we make sure that our investments, the things that we're saving for retirement, the things that we're living off of in retirement, how do we make sure that that aligns with what we care about? Right? So that's what we want to talk about today. My name is Freeman Linde. I'm a certified financial planner and tax expert. I'm also a certified kingdom advisor. And today we're going to talk about biblical responsible investing, or BRI. And if you are coming at this from more of an ESG and environmental social governance angle, I have a separate video that's coming out at the same time. It's basically the same video, but more from that angle. So you can always look at it from there. It's basically the same thing, right? How do we invest? What are some of the things we should think about when we're trying to align our finances with our value, right? So today, again, we're going to talk about biblically responsible investing, BRI, and should we invest in such a way so that the companies that we're invested in align with our values. So let's get right into it here. If we have our BRI, biblically responsible investing, what is that usually screening for? What are we trying to do here? Well, a lot of times what it is, right, is again in maybe the S&P 500. Most of the companies are fine and we're happy to invest in them, but there's a small subsection of these companies. If we zoom way in here, right, and maybe they overly support alcohol. Wow, cannot spell today. Or pornography, or the proliferation of sexually explicit content and those types of things, or of they support abortion or stem cell research or those types of things. Just on and on. There's a lot of different screeners that people use, and so hey, we got all these companies that do some of these things, right? And for the most part, the S&P 500 is good. The whatever other index or fund that we're doing, but there's some companies in there that we don't want anything to do with. And so what a biblically responsible fund will do is it'll say, hey, it's the S&P almost 500, right? We're going to exclude we're going to screen out all these companies that either directly do these things or derive a disproportionate amount of their revenue or profits to these types of things, right? And there's a company out there that does abortions and you're investing in that company, right? But if the companies inside of these funds overly support Planned Parenthood or some of these kind of things, then maybe a biblically responsible fund would exclude those companies. And so why would we care about this, right? Why would we want to do this? Well, again, a lot of times money speaks louder than words sometimes, and for a lot of us, we want to say, hey, I want my money to align with my values. I don't want to be supporting these types of companies, right? And so real quick, I want to make sure that we understand what we're doing here and what we're not doing when it comes to biblically responsible investing, right? So when we think about, right, a company, right? So we got a guy or gal, we got a person, they start a company, it's growing, it's getting bigger and bigger. He owns all of it. He decides, this owner decides that he wants to diversify. He lets his employees buy into it, and then it gets bigger and bigger, and all that, all the money that he gets from his employees that go to him, the original owner, that goes back in, or some of it just goes into his pocket, but some of it goes back into the company so it can get bigger. And then you maybe got couple of other outside investors, and they put some money into it, and it gets even bigger. And then you've got private equity, right? And they invest into it and it gets even bigger. And so now private equity owns some of it, and some other investors own some of it, and the employees own some of it, and the original owner owns some of it. And obviously this all depends on a whole bunch of different things, how it started, and all companies are different, right? But all these, right, you've now got, that's not working, right? You've now got a one giant company that's owned by a bunch of different things. The original owner, maybe the employees own some, private investors, private equity firms may all own this big company, right? And all these people have, the owner put money into it, the employees put money into it, private equity, private investors, they all put money into this company to make it bigger. That's how the company got its money. That's how it's doing its business, right? And then they want to sell to the public. And so they have an IPO, or an initial public offering. And that's where the public gives the company money, and all that money goes to everyone who still owns it, so they get to pocket it. Some of it goes, maybe the company itself still owns some of the shares, so some of it goes into there, right? And then the public, gets the shares of the company, right? And so in an IPO, the company usually gets more money, and either they distribute all out, but some of those people might go back in and buy shares, and so the company gets more money when it does an IPO, typically. And then after that stops. And then the only way it keeps getting bigger is by appreciation, and it earns money and it keeps growing bigger and bigger and bigger. And that's right how you make money. It's one of the ways you make money as a shareholder, right? You own shares of a company that keeps getting bigger. It's appreciating in value, right? But you're not giving more money, right? So let's say you have you, right? We've got you over here, right? You've got money and you want to invest it. And you're looking at a share of XYZ fund. And it's mostly a good fund, but way down here in the corner, out of all of the different things in this fund, you see a bunch of money going towards things that support the sexualization of America, pornography, whatever else, right? We'll just use it as an example. And you're like, well, I don't want my money going to that. Even if it's just 5% of my money, I don't want any of it. I don't even want $5 out of 100 going towards that, right? And so you decide, if we picture this as this terrible company over here, and you're saying, well, hey, is my money going to that company? And the answer is no. They already got their money, right? Instead, if you're investing in a fund that contains companies that operate in a way that you don't agree with, you're not giving your money to that company. Instead, someone else owns that share. And when you invest in that fund, you're not investing in the fund. You're not giving the fund money to give to companies. You are buying a share of that fund from the other person, who is then giving you the share of the company, right? So you give them money, they give you the share. Companies don't get any money. No money goes to the company, just to other people. In the same way, when you go sell the share to get cash back so that you can spend it on things, right? That money goes to you. It doesn't go to the companies. And so I just want to break your belief on this. If we think that investing in non-biblically responsible funds means that we're giving money to companies we disagree with, that's not what's happening. That doesn't happen at all. Right? And but now, on the other hand, inside of there, we own, right? If we zoom in, we see that there's some companies in there. When that company makes money, right? There's two ways. If you own shares of shares of a company, right? There's two ways you make money. One is through appreciation, right? Company gets bigger and bigger. It goes up and down in value, but mostly gets bigger. The other way is through dividends. Company is profitable. It pays money to you, right? As the owner, you own the share, so you get the money. And you might say, well, hey, I don't want to profit off of funds where a corner of them are doing bad things, or things we think are bad things. That's fair. I think that's fair, right? If you say, hey, I don't want to get any of the profits of this, and so therefore I don't want to be invested in any companies that do that. That's fair, right? Saying I don't want to invest in them because I don't want to give my money to these companies, that's not what's happening, right? And that's usually what I hear from people who are looking into biblically responsible investing, right? Now, here's the different lens on it. So I wanted to break the one incorrect belief and acknowledge the one that is maybe a valid reason to do that. There's one belief breaker on it for you. Or not a belief breaker. Another lens that you could think about it is, right, someone is going to own this share either way. Right? It's either going to be, this thing's going on wonky here. There we go. It's either going to be you, or it's going to be this person over here. This person over here is just going to take those profits and go do whatever with them. Maybe go actually go to the places or be a customer of the companies that you don't want to see win. But if it's you and you're getting the profits, then you can take those profits and go support the opposite thing. Right? Especially if it's 5% of our fund is doing stuff we don't like to do, or less than 10%, right? Well, if you're being faithful and tithing and all that stuff, like you're probably giving more to that anyway. So in a sense, we are taking the profits. We're taking what was meant for evil, the things that these companies are doing that are being profitable, and we're taking that profit and we are turning it around and giving it to causes that are doing good. And if that isn't something that Jesus does, right, that God does it, that they take what was meant for evil, it says that, right, you meant it for evil, but God meant it for good. And so in some ways, some of these companies, right, they mean things for evil, or maybe what we would call evil. And we can take that instead and we can flip it around and we can turn it to good, right, and support things that we think are important. And so that might be one challenge, and part of it is, too, from just a practical standpoint, right? Out of all the funds in the entire world that you could invest in, tiny little sliver. This is probably way over exaggerating the actual percentage of funds that are biblically responsible funds. It's minuscule, right? How do they perform long term, right? Maybe you've got your S&P 500 goes up and down, does whatever. Sometimes biblically responsible funds do better. Sometimes they do worse. Sometimes they do better. Sometimes they do worse. A lot of them tend to do worse. I haven't found any that are really consistently better than the good options that I found just on the open market. A lot of times because they're smaller and so they cost more, and so generally they're underperforming a little bit, I would say, and I would assume they're going to keep doing that. You can find small parts where they overperform, like you can with any fund, but again, as we build portfolios for people who are transitioning into retirement, who are in retirement, have to live off this for 20, 30 years, it's a lot of money to pay for something that I would rather just not. So by default, even for my Christian clients, we don't use biblically responsible investing. If people really want to, we definitely can. I have some clients that have that. I have some Catholic clients and they use Catholic funds. I've got some, regular Christian clients, for lack of a better term, and a few of them are in biblically responsible portfolios. Totally fine, right? We can do that. I just would expect that they're going to have a little bit less performance because the fees are a lot higher on those funds than your other types of investments. And because of that, my encouragement is I would just take the profits and go do good with them. Right? Take what was meant for evil and turn it into good. Right? Let's win. We're not going to win. We're not going to win if we want these companies to not be doing what they're doing. We're not going to do that by not owning shares of them. We're going to do that by not being customers of them and getting other people to not be customers of them. Right? And then they lose and they go away. Right? And so, and if you're an owner, you get to vote. So if you really care about it, you could actually own a lot of it, and then you could vote to change its practices, change its things, right? If it's a company that's not their primary business is doing bad things, but they waste a lot of time and money supporting things that you think are bad. Well, if you can vote in different people. If you own shares in that company, in that fund, whatever, you can vote and change the way that it's governed, right? And so there's other ways around that. So, generally, we don't use them, even for my Christian clients, right? I'm a Christian. These values are important to me. I own just regular funds, even though a small portion of them has companies I disagree with or supporting things I disagree with, because I give more than I receive, and I'm turning those bad profits into good. And so that's why I do it for me, and that's been good for a lot of my clients as well. So hopefully that's just a few different ways to think about that. Maybe you were expecting. If this is helpful to you, make sure you subscribe, give us a like. We're here to help people transition from retirement, to help them retire successfully and stay successfully retired. We got a lot of free content, free books, free videos, all these things. And if you want to learn more, some awesome links down in the description. Take care. We'll see you next time. Cheers.